Welcome back. Today, we are continuing the presentation of the Section D question series. Knowing that a group of small consecutive videos will be shown, currently, work is being done to prepare the questions for the year 2023 in simulated exam models for the real exams. For more training on solving the questions at the time of the exam, follow us. The channel is in the trial broadcast phase, and we promise you more video arrangements, complete coverage of all questions, and access to everything new regarding the Certified Management Accountant. Do not forget to like the video and follow the channel. Question 1. What is the cost of goods sold for a manufacturing company that has the following data? Beginning work-in-process inventory of $5,000. Ending work-in-process inventory of $15,000. Total manufacturing costs of $110,000. $20,000 in beginning finished goods inventory. $30,000 in ending finished goods inventory. A. $100,000. B. $90,000. C. $130,000. D. $110,000. The answer is B. $90,000. First, the cost of goods manufactured, COGM, must be computed. COGM is equal to the beginning work-in-process inventory plus total manufacturing costs minus the ending work-in-process inventory. $5,000 plus $110,000 minus $15,000 equals $100,000. Then cost of goods sold can be computed. The cost of goods sold is equal to the beginning finished goods inventory plus the cost of goods manufactured minus the ending finished goods inventory. $20,000 plus $100,000 minus $30,000 equals $90,000. Question 2. A promotional department for a retailer uses job order costing. At the beginning of the period, Job 154 had a work-in-process, WIP, inventory balance of $5,000. During the current period, Job 154 required $4,000 in direct materials and $6,000 in direct labor. The department has an overhead cost pool of $80,000 for all jobs. The pool uses labor hours as a cost allocation base. All jobs in the department consumed 10,000 labor hours. If Job 154 used 1,000 labor hours and sold for $34,000, what is its gross profit margin? A. $16,000. B. $11,000. C. $19,000. D. $23,000. The answer is B. $11,000. To calculate the gross profit margin, first calculate the indirect cost rate by dividing the overhead cost by the total cost allocation base. $80,000 divided by 10,000 equals $8/labor hour. Then multiply the indirect cost rate by the actual units of the allocation base for the job. $8/labor hour times 1,000 labor hours equals $8,000. This amount plus the beginning work in process and current period direct materials and direct labor costs equals the total costs, $8,000 plus $5,000 plus $4,000 plus $6,000 equals $23,000. The gross profit margin is the profit less the total costs, $34,000 minus $23,000 equals $11,000. Question 3. Lucy Sportswear manufactures a specialty line of t-shirts using a job order cost system. During March, the following costs were incurred in completing job ICU2, direct materials $13,700, direct labor $4,800, administrative $1,400, and selling $5,600. Factory overhead was applied at the rate of $25 per machine hour, and job ICU2 required 800 machine hours. If job ICU2 resulted in 7,000 good shirts, the cost of goods sold per unit would be A. $5.70. B. $6.50. C. $5.50. D. $6.30. The answer is C. $5.50. The unit costs for job ICU2 would consist of direct material, direct labor and applied overhead per unit. Cost of goods sold per unit equals direct material costs plus direct labor costs plus applied overhead, divided by number of units. Applied overhead for job ICU2 equals overhead rate times number of machine hours. Applied overhead for job ICU2 equals $25 times 800 machine hours equals $20,000. Cost of goods sold per unit equals $13,700 plus $4,800 plus $20,000 divided by 7,000 units. Cost of goods sold per unit equals $38,500 divided by 7,000 units equals $5.50 per unit. Question 4. Harmony Company used $31,920 of direct materials, worked 840 direct labor hours, and utilized 560 machine hours to complete a custom fishing boat for a customer. Harmony's direct labor rate is $22 per hour and overhead is applied based on machine hours at $34 per hour. What is the total manufacturing cost for this custom boat? A. $78,960. B. $50,400. C. $69,440. D. $79,520. The answer is C. $69,440. Correct. The total manufacturing cost equals direct materials plus direct labor plus applied overhead. The total manufacturing cost for the custom boat equals $69,440, $31,920 plus 840 times $22 plus 560 times $34. Question 5. Spike Sports Manufacturing Company uses a job order costing system to account for its production of specialty golf accessories. On May 31st, the company reported the following balances in its inventory accounts: $45,000 in raw materials, $25,000 in work in process, and $15,000 in finished goods. On May 31st, what is the total of all open job order cost sheets? A. $25,000. B. $45,000. C. $70,000. D. $85,000. The answer is A. $25,000. Correct. The balance in work in process represents the total cost of all open job order cost sheets. The balance in raw materials represents the cost of materials on hand as of May 31st, and the balance in finished goods represents the total of all job order cost sheets that are no longer open. Raw materials and finished goods are not a part of the open job order cost sheets. Question 6. Which of the following is true of job order costing? A. Job order costing cannot be used with actual, normal, or standard costing. B. Actual or normal costing can be used with job order costing but not standard costing. C. Standard costing can be used with job order costing but not actual or normal costing. D. Actual, normal, or standard costing can be used with job order costing. The answer is D. Actual, normal, or standard costing can be used with job order costing. Actual, normal, or standard costing can be used with job order costing. Job order costing allows use of actual, normal, or standard costing. Question 7. Ed was working on a custom-made workbench for a customer. The job, TB0414, was started in November. At the end of November, the job cost sheet for TB0414 showed direct materials of $215, direct labor of 14 hours at $18 per hour, and overhead of 50% of direct labor cost. During December, $85 of direct materials were added to job TB0414 and Ed's time ticket showed 15 hours on job TB0414, 25 hours on job TB0614, 10 hours of maintenance on the lathe, and 40 hours on a new job, DR 1014. Job TB0414 was completed on December 28. What is the total amount of overhead applied to job TB0414? A. $126. B. $135. C. $300. D. $261. The answer is D. $261. Correct. The total labor hours applied to job TB0414 are 14 hours in November and 15 hours in December, totaling 29 hours. The total direct labor cost equals $522, 29 hours times $18 per hour. Overhead is applied at a rate of 50% of direct labor. Total overhead applied equals $261, $522 times 50%. Question 8. An example of a similarity between a job order cost system and a process cost system would be the A. Point at which costs are totaled. B. Unit cost computations. C. Flow of costs. D. Method used to track costs. The answer is C. Flow of costs. Correct. Whether a job order cost system or a process cost system is used, costs will flow from work-in-process inventory to finished goods inventory when goods are finished, and from finished goods inventory to cost of goods sold when delivered to customers. Therefore, this is an example of a similarity between a job order cost system and a process cost system. Question 9. Sugar Industries manufactures specialized candy dispensers. One of Sugar's customers ordered 500 candy dispensers, Job 317C, which was started in March and finished on March 31st. The job cost sheet for Job 317C as of March 31st shows $1,750 in direct materials, 30 direct labor hours, and 40 machine hours. The labor rate is $18 per direct labor hour and overhead is applied at the rate of $25 per machine hour. What amount did Sugar post to finished goods inventory as of March 31st? A. $3,040. B. $3,470. C. $3,290. D. $2,290. The answer is C. $3,290. Correct. The total cost of the job is materials plus labor plus overhead. Total cost equals $1,750 plus 30 times $18 plus 40 times $25. Total cost equals $1,750 plus $540 plus $1,000. Total cost equals $3,290. Question 10. Which of the following statements about process cost accounting is true? A. A process cost accounting system is generally not used in companies that mass-produce similar products in a continuous fashion. B. Service companies that perform individual jobs that are repetitive and routine can benefit from the use of a process cost system. C. For products that are individually produced to the specifications of customers, process cost accounting can be very effective. D. The process cost accounting system tracks costs on a job cost sheet. The answer is B. Service companies that perform individual jobs that are repetitive and routine can benefit from the use of a process cost system. Correct. Because a process cost accounting system applies the same amount of materials, labor, and overhead to each unit produced, it can benefit service companies that perform individual jobs that are repetitive and routine. Therefore, the above statement is true.